going on, everyone? Happy Sunday. Welcome on into today's live stream before this upcoming week, starting Monday, April 25th. All right, we are looking right now at futures across the board. And what do you know? They are down, nice and red here. Not too bad. The market did dump a decent amount in the after hours, at least a little bit more on the after hours Friday. So it's not like it's as terrible in terms of downside. Obviously, over 0.5% is a lot more notable, especially when it comes down to it. We look at the stuff, on Sunday nights, because this could all change, as we've seen many times. Things can change in a hurry going into this coming week. So we shall see what is going on. Hope everyone had a great weekend. And we're going to get right into things and start diving into a bunch of stuff. Quickly, we are getting some, preliminary data coming in from the 10-year, just shy of where it closed off last week. Something we'll be watching very closely this week. And oil also down about 1.5% as we speak right now in terms of futures. So we'll see. But these are two things that I will be watching very heavily this week. Ideally, in a perfect case scenario for a bullish outlook on the market, you would want to see ideally oil coming down under $100, and you'd want to be seeing the 10-year coming down under 2.75%. That would be a really good start this week for a lot of stocks, tech, growth, small caps, you name it, right? It would be a good sign. So we shall see. We'll cross that bridge, obviously, Monday, tomorrow's stream, and all that good stuff, which, by the way, we will be streaming Monday for Power Hour, so last hour of the market open until 4 p.m. Eastern, 3 to 4 p.m. Eastern, roughly. We will do another live stream like we usually do Monday, Wednesday, Friday, same time, and then Sunday nights like we always do here. So we're going to talk about a bunch of stocks. We'll write some stuff down that we're looking forward into this week. I want to just briefly cover the idea that I was kind of thinking that we could potentially see, or a really good look. I think a bullish look. I want to look at the put call ratio because I think this got pretty crazy to finish off last week. And it was really interesting because Wednesday afternoon, even Thursday morning, we're up at we're almost at 450 on SPY. This is the S&P 500 ETF. We're almost at 450 on SPY Thursday morning. And it's like, we're headed back up. We're curling off this little bottom at this 435 we put in, and here we go. And boom. 2 days later, we are down here at 426, under 425 in the after hours on Friday. So the market came back at a pretty nice clip in just 2 days. So as we've seen this move down, right, we could see a snapback up, and we've seen many of those situations. Now, the thesis or the idea that could be a really nice capitulation move would be, okay, and we say capitulation move, what we are essentially looking at and what we're talking about is we're essentially talking about a move that panics a lot of traders or investors, retail traders primarily, to be honest. Not always. It could be anyone. And you see a massive flush, stop losses hit, dumping in pre-market, dumping at the market open, and that is then bought up very dramatically. We didn't really see that this past week, right? Didn't happen. Now, this would have shown me that sign on Friday had we closed, let's say, above 430, but we didn't. So, a hint of that, we did not. So the idea is that a potential gap down and flush out in the morning, dare I say, coming down into range, right, into this kind of area, which is in line with some of the March lows, dare I say, sub 420. Okay, and then a buyback. So if we saw a move down where the S&P comes down sub 420, opens up below 420 tomorrow morning, and then goes green that day, finishes up, fills the gap, finishes over, let's say 425. In my view, that would be a bullish look. That's your capitulation move. We haven't really seen that. Do you need to see that for a reversal? No, but that's an idea, something to think about, and we'll see. So what I will also note is that the past 2 days, looking at the put call ratio, which we're going to look at in a second here, we saw a big move in the put call ratio, and that was on 2 very nasty days. Now, I guess it was after Powell spoke on Thursday, and as we speak here, guys, something just happened. Oh, maybe not. I was just looking at this like a second ago. As I refreshed the futures, and these are down more, like way more than what they were. Yeah, they're down a good chunk more than what they were literally 5 seconds ago. So now they're getting down to more notable territory. So now that thesis, that theory is potentially going to play out tomorrow. We're looking at a gap down move where we're going to open up, if we open up over 0.5% lower, it's somewhat substantial. It could obviously be bought right back up, but we're looking at potentially opening up about 0.5% lower than where we closed on Friday. Across the board. Now, this is everything. This is small caps. You're talking techs, the NASDAQ, S&P, and the Dow. Everything. We'll see if this holds up. If it does, then you could be looking at that move down, under that. Let's see what 0.5% would do. Let's see what 0.5% from last close would roughly do. 0.5% would only get you down here to like 423.50. So you probably need to have a gap down of over 1% to get that sub 420 flush move. We'll see if we get it. And then obviously closing very strong would be a very bullish thing, at least in my opinion. Obviously, maybe it's very possible that you don't close strong and that move doesn't happen. That's just a theory we have. When you start to accelerate to the downside like we have just seen. Let's see. So I want to look at the put call ratio really, really quick. Let's pull it up. The reason why I like looking at this, I forget which site I use, which one I like the better. This is a visual. Yeah. Oh yeah. Look at this is nuts. This is nuts. So take a look at this this chart. We just hit the highest we have seen in the past. What is this? This goes back a year. The highest on the put call ratio in a year, and those values skyrocketed in the past 3 days. So on the 19th, we're looking at a 0.51, and the higher this is, essentially, the more puts that are being purchased, the more puts we're seeing. And so obviously this number generally, like there's just generally historically perma bulls, like just long-term bulls, like we generally see more calls than puts, right? So that number is usually a decimal, right? Almost all the time. But when this number gets up closer and closer to 1, that gets pretty interesting, at least to me. So what we're looking at right now is a 0.87 on the put call ratio. Every time this is spiked up over 0.8, if you go back, this is going to be the January 21st. We had a bottom very shortly after that. Last little spike here was March 15th. That was the bottom as well. And if you go back here to December 3rd, let's see what December 3rd looks like on the S&P. December 3rd, I feel like that was back in here. It was back in here, actually. Yeah, it was back in this dip right here. Here's December. So again, these line up with bottoms. December 3rd was a literal bottom from this pullback from all-time highs back down here. So the put call ratio is high. And the reason why we look at this, because why does it matter? Because generally speaking in the stock market, especially when it comes to short-term, these numbers are generally like there's an average, there's a general kind of consensus move. Generally speaking, it is what it is. And generally speaking, on average, like X percent of people are bullish, X percent are bearish, and that in the long term is bullish. However, this is much more represented by short-term sentiment and short-term traders or short-term investors too. It could be a couple weeks, couple months, even 6 to 12 months too. But you're seeing the put call ratio pop up and spike huge. So this was down on the 18th. Let's go back to the 18th. It's at 0.45 on the 18th. The 18th puts you right here. 18th, actually interesting. 18th, we actually were kind of slowly kind of chopping our way down, dipping a little bit here on the S&P. And we saw that put call ratio was down pretty low. And that quickly accelerated as we popped up a little bit. And then boom, it got a big time move. So that's notable. And that's something I'll be watching into next week as well. So those are some things that we're going to watch in there. Futures, again, kind of still where they were a few minutes ago, but that's the big stuff to just watch, And we say this because, again, most in the short term, those short-term traders, most the consensus, the reason why you want to, the contrarian view is not a bulletproof thing. It's been around for a long time. It's not a bulletproof method of investing or trading. But this contrarian view is very, very good to understand where the herd is at, where most people are looking and where people are looking to make money. And we understand that, yeah, could the short term and did bears make money the past 2 days? For sure. If you bought puts the past 2 weeks, you're up. You should be up. Obviously, time decay can kill you, but if you're on just buying puts on the S&P, you should be up, right? You shouldn't be down, depending upon your time frame. But where you generally don't want to be in the same camp, just like how when you see penny stocks running and everyone's bullish and the stock is going to the moon and it's going up and up and up, you're going to see the most posts on Mullen's a good example. Mullen, who knows? I don't care what Mullen does. If it starts pushing up again, great. But Mullen back here, if you go back to mid-March, 17th, 18th, 19th, even 20th, okay, 22nd actually, you will see the most posts, the most bullish posts, the most bullish sentiment you're going to see on social media back here. And guess what? That was the top, at least in the short term. That was the top. So in the short term, you generally want to fade the sentiment. So in terms of that being, okay, if people are going bullish, you want to kind of look the other way. And if people are going bearish, you want to look the other way as well. So that's just the idea. Generally, it doesn't always work out that way, but it's a general rule of thumb. It's a general way of the contrarian view. But it also makes a lot of sense because we know that not everybody's making money in the stock market. And actually most, especially in the short term, most are losing. So that's just something to think about, something to note. That said, that's what we're looking at there. Again, oil we talked about, oil down for now. Under 100 is kind of your threshold. That starts to fade under 100 quietly. The quieter this kind of goes, the more interesting that gets to me. But I'll be watching it, so we'll see. And then the 10-year under 2.9, it's struggling. 2.95 is a spot. Let's look at the 5-day chart. The 10-year yield, this has been very, very crucial. It just has not, as it's gotten up here really since the, looks like the 19th. The 19th is when it got up over 2.9. It's got up to this 2.95 a couple of times, but it just could not break it those two times. And so we're still hanging around, but a substantial move down, dare we say, to 2.75, would be a nice look for tech and stuff like that. We'll see. So that's what I'm watching. I like TLT across that more too. So TLT generally will go up if that goes down. That's that. All right. Good evening from Lakeland, Florida. Melbourne Beach in the house. What is going on, guys? Looks major opportunities up and coming. I think so. Put credit spreads look juicy, to be honest. Bear market. Do you do more swing trading or more trading with calls and puts? Right now, primarily swings, and it's a little bit of both. Sometimes I'll have some, and the swings are generally not short-term swings. It's generally speaking bigger picture swings. And right now, that's a little bit of both, a little bit of options, a little bit of shares. So I have some small caps that I like that I believe are undervalued that I play. And then I have option positions across bigger picture moves on different sectors. So for example, biotechs, semiconductors is another one. All that good stuff. So we talk about that. And again, just another thing to reiterate too. The Webull portfolio we talk about here, right? We show the intention obviously is to make money. So we're not trying to do something stupid and lose money and be like reckless. The intention is to make money. However, we have to understand that is a very high risk, high reward. So that portfolio we have to understand will fluctuate in a substantial way, especially when you have calls, puts on different sectors of the market that get hit, that do well, you're going to see bigger fluctuations. So just something to make sure you're aware of. Long-term, the covered call strategy, those are different types of strategies, and it's something that I want to build out more of this year, diving deeper into, which we'll do. So this portfolio is not a day trade portfolio, at least as of now. I'll take some day trades if I see them, but they're very, very small size for the most part. It's mostly bigger picture swings that we're looking for. And also, too, the timing is obviously the hardest part, and that's something people have to understand, too. If you think you can see a move this way or this way or this way, right, it's difficult to catch the bottom. I'm not worried about necessarily catching bottoms, catching tops for shorts, whatever. I'm more worried about the bigger picture, right? So if I'm buying SMH, for example, and I start buying SMH in this zone, and we'll see what happens this week. This week is going to be a pretty crucial week for a lot of stuff. If I buy in this zone and it ends up dumping right below here and then reversing and then end up, in 6 months, it's up here at 285, something like that. That's great. Like I'm fine. You're going to have this volatility in the short term. You're going to have these types of moves. It's difficult to time the exact bottom, exact top, but it's big picture. It's risk reward. So if I'm buying SMH, but I'm buying this thing, let's say up here, I'm hoping for a breakout. I'm expecting a breakout, but I do know the past, 5-6 times we've gotten up here to over 315, we've gotten rejected. So I'm looking to buy towards supports. Obviously, could we flush below this? Yes. And it looks like we very well may be coming down towards, maybe dare I say, 225 on SMH. But even that said, if this does end up here, right, your risk reward, at least in my view, is much better buying something down towards supports rather than up towards resistance expecting a breakout. When momentum is there, yeah, you're going to look like a king. But when it's not going to be a consistent long-term strategy. Obviously, you go through ebbs and flows. The market is the market. But that said, that's my approach to that stuff. So we shall see. But I do definitely want to have it, and that's a plan for later on this year too. as we organize things, as we kind of move through. There will be times. Right now, in my opinion, is not the time. I think we're at an inflection point in terms of either we're going to see much more downside or we're going to see a big reversal back to the upside. And depending upon what happens, we'll make things a lot more clear as to what I want to do with the portfolio going forward. And we'll see how that plays out. But ideally, the plan is going to be to have a day trade only portfolio this year, later on this year. And that's that, where there's like no overnights, nothing. That's it. So we'll be able to learn from that. Ideally, in the Saturday videos, we'll kind of have a run through of each of the portfolios. So, okay, here's what happened this one. Here's what I did here. Here's what I did here. Here's what I did here. Here's what we learned. Here's the stupid mistakes. Here's the positives. Here's what went right. All that stuff. That's the intention. Just so people can learn from that stuff, learn from my mistakes, learn from the successes, learn from all that stuff. So that's the intention. That's the plan. But for now, I think we're at a very interesting point, especially now when we look at that put. When I saw that put call ratio the other day, I was like, whoa, that's a spike and a half in a very short period of time. So this is very interesting. Generally, obviously, leads to volatile times. Also, could be a very key point in the history, or at least looking back at things, and we'll see how that plays out. So that is that. The problem with that is that if you, I like the swings a lot better. It's first off what got me, what I was able to grow consistently from over time, in different market scenarios and situations. It depends, but there's always opportunities. You can swing trade, 3x bear ETFs. You know what I mean? If you think things are going down and still make money, you know what I mean? Or you can just swing trade short, like on certain stocks. Like you can swing trade across anything. It doesn't have to always be like bullish. So. All right, let's see. Thoughts on Disney? Let's take a look. Let's dive into Disney. I'm sure there's a lot of stuff that's been getting nailed, right? Wow, look at Disney. Oh, my. This thing got just absolutely... And here's some gaps in the chart that I had. This is an area I was looking at, a crucial spot. Well, not crucial, a spot for a bounce. And we just flew right through that last week. Jeez. So now Disney, I'm looking at this little dip zone, this little spot right here, reversal spot. But it's interesting, too. Because people think, to be honest, that you have to respect, like, if a stock, we'll look at I want to look at Microsoft too, I think, and NVIDIA as well. You have to respect a certain spot for that to be like, support. If you look at Disney and you went back to October, September, October of 2020, what you would have drawn is a line right here. Okay, let me zoom in so you guys can see this a little bit better. You would have drawn a line right there. And what you would have said to yourself is, here's my support. If that breaks, I'm out. And then what happened? Well, Disney broke that support and then reversed, So you got to give things a little bit more to play out. That's why we are at some crucial spots for a lot of things. I think this week, next week, the next 2 weeks will be very, very crucial points for that. And if decisions need to be made and to, reverse the course, that's fine. In the next couple of weeks, we shall see. But I think we're at very, very crucial spots. So these next 2 weeks are going to be very volatile, I think. But the net of how things shape up and play out is the bigger picture I'm looking for. And to be honest, I'm not super concerned about the day-to-day action across the market. I'm more concerned about looking at things like the put-call ratio, like the 10-year yield. If these things if the put-call ratio stays high, that means a lot of people buying puts. Generally speaking, that has been a good indicator to play the opposite side. And if the 10-year starts to cool off, what has been hurting stocks could start to reverse and potentially start helping stocks, especially tech. So that's the two spots I'm looking at, right? And we're up at a resistance on the 10-year. I mean, this thing is around 3 over the past 5 years. Look at this. Every time it gets up to this spot, it's gotten rejected the past decade, past 10 years, really. So we're at a crucial spot. So if this thing just rips through, obviously, hey, this is now an outlier. It's no longer respecting the trend. Okay, boom. But if not, we got to play it off of the history and based off what we've been seeing. Not to mention, there's a lot of other bullish stuff that I'm seeing based on sentiment, based on how bearish the sentiment is right now. It's quite interesting. I'm going to pull it up really quick too, just for those who are either tuning in now new to see this, or for those who want to look at this after the fact. We pull up Ryan Detrick's stuff a lot because he's got some great data. Let me find it really quick. Give me 2 seconds to just scroll through here. But it was this chart right here that I thought was the wildest chart I've seen in a while. So you go back, essentially this is a gauge to sentiment based on investors, and it's a poll. And whatever poll or percentage is bullish is essentially given by this column right here. And the times that we've seen this poll come in under 20% bullish has led to over like 30 different situations where we've seen the markets go higher. And it's overwhelmingly, this is the exact contrarian indicator. Like this is why people like to think of the contrarian way, look the opposite side, because you will see that when everyone gets super, super bearish or less bullish, and generally speaking, percent bullish isn't taking into account percent bearish, but there's a lot more people bearish than bullish, obviously. So essentially is telling you how many people are bearish versus bullish. And so you're seeing that there's a lot less people bullish, and the market has the outlier was 2008. January 2008, we saw markets decline in a substantial fashion for the next 3, 6, and 12 months. Every other time, 6 months later, on average, this is the S&P, by the way. S&P was 12% higher 6 months later, and on average, almost 20% higher 12 months later. Nuts. Some outlier moves here. 2009, obviously, when people were pretty skeptical of, okay, we're kind of reversing a year later after this, massive move down. We saw, massive returns from 2009 to 2010, March to March, almost 70%, which is nuts. That's just, an outlier move, but that's just something to think about and something to note. So that's what we talk about it. All right. Disney, we talked about Disney, and we're looking at this spot right here down towards this 117. And below that, then you come into maybe down towards 113, 110. Dip right here to 108. So there's some spots I'd be looking at these prior supports. So I'm looking back into here, and there's a lot of movement in here. So down here towards this 113 could be next if this 117 cannot hold on Disney. It's in free fall mode though, absolute free fall mode. So based on how we finished up last week, to me, this tells me that we're going to be looking at a lot of stocks gap opening up lower than where they closed on Friday, gapping down, and then whatever happens, then the coming hours after that will be very, very telling in my opinion. So that's that. Trading sub-20 deltas on put spreads. Thoughts on put options on Vixx? Yeah, no, I think that's a good idea. Here's Vixx. Here is the Vixx. This didn't look bad, to be honest, on the dips down here into the 20s. Lower 20s the past couple weeks. It's kind of building higher lows, bigger picture. But yeah, this thing over 30, we know the Vixx over 30 is generally a good time to go short, which we very well could see. Let's look at the futures really quick. And yeah, we're close. We're looking like we're up around that 28. Like where are we closed? We closed at 28.21. So we're up around 28 30s, 28 50. Yeah, so we're looking around this 28. So we're right there for now. Nothing crazy, but the VIX is going to be very interesting to see. Over 30, yes. It gets scary for sure over 30. But again, as we've said before, right? The biggest moves on the VIX are generally not going to come when you have when you have almost, a large chunk of the market short. When a lot of the market's in puts, generally speaking, you're not going to see them all win. You could see them win temporarily a day or two. But bigger picture, if we get a spike on the VIX 30, 35, that's been a really good spot to go short. Obviously, you can see moves where the VIX opens up super high, comes down the entirety of the next day. But you had a really big move on Friday, a nice move on Thursday. Let's see how that plays out. But I do like that over 30 is a decent spot to go short on the VIX. So we'll be watching that as well this week. It's a good indicator to watch. Over 30 gets scary, and over 30 is going to be crazy, crazy volatility across the S&P. So even the NASDAQ. When the VIX pops 30, you're going to see big moves. So don't. This is going to be interesting too. Like you don't have to necessarily look at something to be aware of when you look at the S&P this week. If you're looking at taking a trade on this stock or that stock, day trade, swing trade, whatever it is, just be ready for volatility because this is going to be volatile. And just as we've come down super, super hard the past 2 days, about a $25 move on SPY, roughly about a 5.5% move, things could snap back in the other direction very, very fast. So be careful just jumping all in puts, calls. If you're going to do that, I would recommend buying some time. If you're going to play for a day trade, especially on the S&P, it could be great for day trades off of technicals, off of supports, resistance, supply, demand zones. Great. We've seen it happen. It's been great. But when you go to the option chain and you look at the option chain, I would advise you to look out into May. I would say stay away from the Aprils. They're going to be so volatile unless you're there for the volatility and you can play that. I would advise you to at least go out into May in terms of expiration time frame. If you're even just for day trades across SPY, you're going to have plenty of volatility where that came from. You're going to feel a lot more comfortable in that trade, in that position out into May. Obviously, time decay will kill you if you're planning on holding it very, very long. But if it's a day trade idea, out to May will save you. Will probably save you a lot of stress in the moment. So there's something to think about. Big earnings week. Big earnings week. People are so bearish, and they're gonna. No, I'm telling you, when it comes to Twitter sentiment, I have seen some. This sentiment, and it makes sense. It really, because I got. It was really weird. I'm like, the past just Thursday, Friday, man, whatever it was, some switch just flipped across sentiment, and people went from like, whatever, and then we're kind of going with the flow here to like bear central, and this was once I saw the put call ratio, I was like, okay, it makes sense. When I saw that, because people start speaking out when they're buying puts, they're already in puts. They want it to go down. So they're going to start talking about, oh, well, look at this chart. We'll look at this chart. Look at this. This is why we're going down this. So you see all the bears come out, when that happens. And it's the exact same on the bull side. When the put call ratio spikes back down, people are starting to say, and the same exact thing, guys, when we were back over 460 on SPY, breakout mode, all-time highs, this, that. It's the same thing, It's just understanding when we see those types of fluctuations and those outlier kind of ups and downs, it's time to start thinking the other way. At least be aware of it. It doesn't mean you have to act all the time. It doesn't mean, oh my God, I got to buy puts, buy calls. No, it just means just be aware, right? Just understand the situation, understand the context. Like, what am I in? Am I in stuff that's going to be super, super, volatile compared to this or that? Does it make sense to lock some gains here? Maybe just trim some profits, maybe to just deleverage, get maybe buy a hedge, grab a put for a hedge on top of my longs. It's just something to think about. All right, crypto TA. Let's take. I do want to look at Bitcoin. It's been a good view to get a feel for risk on versus off. Let's see that. But really quick, seen SPY to 414 Monday and bounce back to 440 end of week, but only time. If that happens, it would make a lot of sense to me. It really would. I wouldn't be surprised. Which 414, let's just mark that on the chart. 414 would be like right around here. So that would be pretty much in line with not the absolute lows that we saw from late Feb, but like pretty much right into the lows that we saw from early to mid-March. And then 440 man's back up here. So that would be, if we saw that, I would be very, very bullish, at least in the near term. If we get a move like that where SPY goes like this, dumps down, and then pops something like that by the end of the week, would be nuts. But we've seen some crazy stuff the past couple months. So yeah, I literally would not be surprised if we saw that, to be honest. Something to also note: Twitter is now in. There's been some news. Let's just pull it up really quick. I do want to pull up Twitter because they had some news this weekend about a little bit of a second look here. So they're taking another look at the Elon Musk takeover bid. This news came out today. So the reason why, I believe, was because shareholders are kind of pushing for this. This could be in their best interest. And so maybe they can negotiate a little bit of a higher price, and maybe Musk is able to pull together, some partners here. And this could end up actually kind of happening. So this is going to be interesting. I'd imagine Twitter is going to pop off because of this. So Twitter probably, the spots to watch on Twitter is going to be up here. Key spot, we'll see where we open up tomorrow morning. It's not worth, to be honest, taking a guess, because you could be waking up tomorrow morning pre-market and Twitter's at 55. But it's up here towards 54.50 is a spot. That was the resistance that Twitter could not break above back on the 5th of April. So kind of curling back up, never filled this gap totally back to the bottom, back down, but doesn't have to, at least for now. And then we'll see what happens. If we open up over here, it could be a nice little run, maybe up towards 60. We'll see what the rumors are and stuff coming tomorrow. I'm sure a lot of more news could break on this by tomorrow morning, but that's the thing. He has secured $46.5 billion in financing, apparently. So now the two sides are meeting on Sunday to discuss. So we'll see if we got some more news out of that. So that's going to be interesting to watch. Okay, let's look at Bitcoin. I believe, if I'm not mistaken, it was kind of close. It was riding our trend line that we had drawn in, but I don't know if it's there now. Yeah, it's cracking down. It's cracking down a bit here. Doesn't mean that this trend line, it's the end all be all. No, by no means does it have to hold the trend line. But yeah, below this trend line, your next spots are going to be like 37.5 and then down here towards like 34 on Bitcoin. So this is the range that we've been in. And trying to build higher lows, it doesn't have to. The reversal doesn't have to be the same way that everyone expects. Especially nowadays, with a lot more focus and attention on this type of stuff. You'll see sometimes these trend lines cracking, and then the stocks reverse, or these resistance lines break, and then the stock come back the other way. So you kind of can see a lot of different things happen. But we did break a big downtrend though, from when it hit last year back in November, up towards almost 70K. Big downtrend reversal. So here we are on crypto. I do think, again, bigger picture of this, though, I do want to see Bitcoin over 45K and then back up over 48K, the key spots for a move to the lower 50s, and then we'll see beyond that. I really would love, perfect world, would love this type of move. Would love it up here. Would love Bitcoin up into this right box. Could it overshoot it? Could it undershoot it? Sure, but I would love it up into that. That's a target I'd have to take something off, trim some profits, or potentially even go short on some miners. We'll see. Potentially. Versus the highs. Just versus the highs. We've talked about that before too. So it's just something to think about on that front. I do want to pull up really quick. Just jump back to see this. Yeah, so it was funny. Like 20 more. We've been going live for 30 minutes. So 20 minutes ago, this is looking a lot worse. Ideally, I would like to see, as much as it might be painful in the morning hours, I would like to see a flush at the open and then that get bought up throughout the day or the week. Ideally, perfect world. Doesn't always have to work out that way. We could bounce. We could go up immediately, gap up. And then if we gap up, I'd be a little skeptical of that. Maybe grab some puts as a hedge in case we do want to pull back further. But we shall see, though. We shall see on how things open up tomorrow. Ultimately, that's the biggest thing I'll be watching will be that S&P move, and we'll see. The NASDAQ, by the way, if we look at the NASDAQ, very, very close to its lows. So this consolidation is no longer valid. It's not consolidating there. It broke down out of that. But the NASDAQ is very close to its lows of March and February, right in here. So here's a spot to watch on the NASDAQ. I would imagine you're going to find some very strong support there, at least for a day trade bounce idea, at least. So if you're looking at a move, if you want to play, calls on QQQ or something like that for a reversal day trade or even a swing, versus this 12.5, this 12,500 on the NASDAQ, you're very close. If you come into this range, under like 12.7, that's the spot to start buying calls and risk versus those lows. Could you dump right below? Sure. But what I would be looking at is this. Because you can trade these things in the after hours, like QQQ, SPY for 15 minutes after the close on non-expiration days, I would be looking at this and play it to the close. So if I'm buying calls on the NASDAQ as it comes into here and we get a close, if it closes under 12,500, I cut those calls either right before the close or right in the after hours, get out of them. Obviously you could get, the reversal could come and you can miss it, whatever it is, but there's, you got to respect your technicals there, respect your plan if that's your plan. And then that would be the idea. So it's not a bad idea for QQQ calls, versus that. If we get a little bit more of a dip, which ideally we could see that very, very quickly tomorrow morning. QQQ, same thing, coming into those levels. It's about $9 away from the lows. Not even less, honestly. It's about $8 away from the lows. And then it's funny because it lines up very, very nice with the lows of May back last year, right at that 316 area. So that's a spot to watch. 315. Give it, a kind of more of a psychological spot, 315. 315 is a spot. QQQ, as long as it closes above that, that's your spot to go long, versus if you're looking for a dip buy, support buy, bounce trade idea. Yeah, that said, let's look at the Dow really quick. I want to see what the Dow's at. The Dow got look at this. Like if you look at the Dow weekly candlestick here, the weekly looked nasty, but the past 2 days is nuts. Just got hammered to the downside on the Dow. It is coming back into this range on this downtrend. Not perfect, but we could be looking at this, possible. We have a lot more room to go though on the Dow to come and test the lows. Like for example, the Dow has to go from where it's at right now. The Dow would need to go down about 5% to break those new lows. I think it's going to be the most out of everything. S&P would need to come down about 4% to break new lows on the year. And the NASDAQ probably even less, I'm guessing. Let's just see. NASDAQ would need to come down about 2.5%. So that could all happen literally. Like the NASDAQ could hit a new low tomorrow, if things get nasty. But the Dow has held up the best, and it's not going to be as strong of a bouncer, generally speaking, than SPY and then S&P and the NASDAQ, generally speaking. All right. Rather bad called Bitcoin or SPY's levels versus 45K and 460. Yeah, no, exactly. That's the thing. Like, would you like this? This is how people get caught up, and it obviously people can be successful many different times, many different ways, and there's different situations, right? It's all about the context. But in just the way I see it, everyone's different. Some people like momentum, and they only play momentum. Some people don't. Would you rather buy the NASDAQ here, right? Would you rather buy the NASDAQ here? And okay, we end up going down, but we break the lows. Okay, but would you rather buy the NASDAQ here? Okay, or would you rather buy this when it broke out of that past resistance at this 14,500, which it did, and it closed above, it looked good, and then fake out, and here we come back down. So yeah, maybe in the next, however long, we come back up and we make a new high and you're fine, right? If you're just buying the NASDAQ, if you just buy, shares of QQQ, whatever, or even just one share of SPY, right? Whatever it is, sure. But I'd much rather buy this thing down here and potentially, and over time, right? Or if you time it right, depending on options, whatever, I'd much rather have, 13% in the green before we come back up and test that resistance point. You know what I'm saying? If we do bounce here. And if we don't, we come down. I'd much rather like to buy this thing here versus up here. That's just a concept that I generally like to follow. So we'll see. Let's see. SPY 500 at 7 cents. No, that could be a good flip play again. Yeah, for sure. So we're talking about the SPY 500 calls out to June. Now, wild action here. But if we did get a move on SPY down into this, sub 420, oh my, those 500 calls would be worth nothing. I mean, you could probably get them. Let's look at those June calls really quick. I think it was June 17th. Now, this is not like a very high likelihood in the money type trade, but it would be for a quick, flip. So you could get these for 7 cents. And if SPY dips, you probably can get them 5 cents or less if it dipped down sub 420. And you could probably flip these for 6, 7, 8 cents minimum, right? If we got a bounce, very, very fast. So make whatever percentage that is a lot. It's a pretty good percentage. You know what I mean? On those. So that's what we talk. We've been watching those for a while. So something to think about. Let's see. NVDA. This is at a crucial spot. Actually, I think it's beyond supports. Yeah. So it's funny because look at this thing. It's try to hold, and now boom, you're losing it. You're breaking supports. You're falling down. Now here's some spots to watch though on NVIDIA. And like you said, we don't need to necessarily hold the prior supports. Obviously, we don't have to do that. Let's see. Here's a spot right where we closed last week. Very crucial spot. It was actually a spot from October's dip at this 195. Below 195, your next spot is down here towards 187. And then below 187, your support here is at 178. So there's your 3 spots on NVIDIA. 195, which we're at right now, 187, and 178. So if you are new to this stock and you're like, you know what, I think we're going to see a bounce and I want to play this for a trade. We want to go out to June, go out to July, August timeframe, whatever, on puts, calls, on calls ideally, if you're playing for a reversal. Or just shares, if you're playing shares too. Because this has got a good enough movement, to be honest, that shares, if you want heavy size, you can, off a 10% move, which looking at this chart from here, a 10% move is only back to 215 as nothing on this chart. In late March, early April, we're up here we're up, 50% higher from where we are right now, 50% higher. So this could be a stock that actually has a really crazy move off of, or for a dip buy. So your risk reward is really nice. You actually have a couple gaps to fill here too as well. So you could be targeting some of these little spots right here. Gap to fill on the chart, overnight gap downs is what we're looking at there. Bring these guys across so we can kind of target those levels. But yeah, your risk, if you're accumulating shares in here, you could risk it down to this, which is about a 10% risk, ideally. You're going to risk less than that because you can buy a chunk of shares at 195, buy a chunk of shares at 187, and then buy a chunk of shares at 178. And if you get a 2 consecutive closes under 178, you cut it off. And ideally, your average is right in the middle at like 188, and your average at 188 versus that is risking yourself about 5%. And upside targets here, maybe your first target is this area right here, which is about 10, 15% away. So your risk 5 to make 15. Great. Next target is up into this zone, up 25%. And then final target is up here towards 35%. And then you can hold a couple shares or whatever you want to do for the ride if it continues on up, and put a trailing stop loss on that. And that is it. Simple idea, simple play behind that. So that's not a bad idea. I don't mind that trade versus that 178. Honestly, opening something at 320 on the Qs, sub 30 put spread, take advantage of the bounce and implied volatility. I think we'll see what happens. I kind of hope we open up a red, but I don't, again, you want something to happen and it doesn't always work out that nicely. So we'll see. But if we can flush a little further, man, this would be a nice opportunity, I think, tomorrow, or this week, really, in general. NSPR, Form 25, NSE. Let's just take a look. I don't even know. Let's see. BAM SEC. Ideally, this stuff you have to read through, and honestly, to be honest, there's so many different types of forms that could be filed and all this good stuff that I believe this form is filed because it's been about a year almost since they were removed from the New York Stock Exchange, I believe. I believe that's what it is, if I'm not mistaken. Because last year they had a similar. Let me go back to this form. I'd have to look at this form again. I'm not exactly sure what that specific form means. I believe they withdrew from the New York Stock Exchange last year. And maybe that's something to do with that again. I don't know. But I believe that's what it was. If I jump over to Seeking Alpha, because they uplisted to the NASDAQ and they popped off the New York Stock Exchange. I believe that's what it has to do with. Could double check that, but I want to look and research that or look into this. I'll leave it up and I'll jump into it after the stream just to make sure and confirm this, what this stuff means. But I believe it has to do with that. Holding puts on NVIDIA expires this week. Should I hold them or sell them in the morning? Obviously, I'm not going to say oh, you need to sell them or you can do what you want to do. We fell below support, so you got a nice move down. I think if we do see further substantial red this week, I think it would be a good time to take profits, at least on some of the contracts. That's what I would do, especially as we've now flushed below this area of support. We've had now 3 red days in a row, and if we get a flush even further tomorrow, that would be the spot, I would say is a good take profit into this 187 or 178 zone on NVIDIA if we get that this week, because that's where I'll be looking to go long for a reversal, to be honest. So I don't think it's not. I think that's what I would do. I would be looking to take that off to Monday, Tuesday time frame, depending on how many contracts I have, whatever the number, whatever the deal is. Depending upon up or down, or putting a stop loss at break even, or putting a trailing stop loss or mental stop loss at, hey, if I bought the contracts for $5 and now the contracts are worth $7 and it comes back to $5.50, I don't want to go red on the trade. I'm going to stop myself out at a 50-cent gain on the contracts. And whatever that however many contracts it is, something like that would be a good idea, just so that you don't lose on the play. If you're up, you should be up unless you bought them at the close on Friday. You should be up, depending on when you bought them, ideally. But yeah, that's what I would do personally. I really like NVIDIA. I can't wait to go long. I think it's coming into some interesting spots. I think it is. It is. Now, if it does, this is a big breakdown move. If it comes down below this 178, I think you can definitely see this thing down to the 150s. But that would probably, either have to do with earnings or that would have to do with the overall market. So it's going to be a lot of both. Now, again, with a lot of these stocks, we are coming up on earnings, and we saw some hard sell-offs. Maybe it has to do with what's it called, with Netflix. Maybe it had to do with some of this stuff. But we're coming up on a lot of earnings. Let's look at the earnings calendar. Earnings calendar. I want to actually, let's see if we can find a better one on like Twitter or something, because it's probably better. Earnings calendar, please. Let's find like a picture of something that looks good. Yes, this is what we like to see. The mass investor. This is what we want. All right, here we go. So big stuff. Coca-Cola reports tomorrow. Activision, some somewhat notable names. I don't think they're going to make or break it for the market though, to be honest. So I think whatever. That's pre-market. After close, Tuesday, UPS. We have GE, Microsoft, Alphabet, Google. I mean, look at these. There's some big names coming up on Tuesday after the close. So Enphase, 3M, Pepsi, JetBlue, Waste Management. Okay, so we got some big names. Tuesday is going to be wild, I would imagine. Tuesday's going to be a wild day. Wednesday, Boeing, Spotify, T-Mobile, Harley Davidson, Ford, Meta, PayPal. Here we go. After close on Wednesday is a big day. Qualcomm, Pinterest, Teladoc. Oh my gosh. There's some big stuff Wednesday. Honestly, there's going to be some action. We may as honestly just even do streams on these days because it could be fun to watch too. But at least we'll get Wednesday's stream in the after hours. We'll stay on for a little bit longer to get the earnings for these guys. And then Thursday, Twitter. I mean, who knows what's going to happen. Twitter is going to be a gamble and a half. Obviously, if you had calls going into this week, you're going to wake up probably tomorrow morning probably, unless there's some more news overnight. Based on what happened, based on this, is that Twitter is now potentially taking another look at this takeover. Back to the earnings calendar. Where was I? Right here. Okay, Twitter, Caterpillar, Nokia, Southwest Airlines, MasterCard, McDonald's, Domino's on Thursday. Then Apple, Amazon, Roku, Intel, Robinhood, interesting, on Thursday after the close. And then Friday, ExxonMobil, Chevron, some oil companies, whatever. So big stuff Tuesday through Thursday. Tuesday, Wednesday, Thursday, after hours is going to be insane because you got Microsoft, Google, Visa. I mean, just right there. I mean, if you just look at the S&P 500 weights, I mean, just right there, you're going to have some monstrous potential moves. Apple with a 6.9% weight in the S&P. Okay, Apple moves more than 5%. You're going to really more than 3%. You're going to feel that in the S&P big time. Microsoft, a 5.6. Amazon, 3.5. Tesla's already done. Google, Alphabet though. Google is in here at roughly a 2. So we got some big players coming up. Big players. ExxonMobil is actually up there too, 1% weight. And then Meta, 1.6. So yeah, 1.16. You got some big players. And then if you go to the NASDAQ, obviously different story, even more, even more nuts than the S&P across some of these tech names. That's the big stuff for this week. I would be very interested to see how, the market reacts in anticipation. If we do sell off though, Monday, if we sell off big time tomorrow, you could be very well pricing it in. So just be aware of that. It could be getting priced in. And if these earnings surprise to the upside, let's say, I don't know, out of like the core 9 we're looking at here, let's say Microsoft, Alphabet, Visa, Visa's whatever. Let's just say the core like 8. So Microsoft, Alphabet's 2, Meta 3, PayPal 4, Apple 5, Amazon 6. So out of those 6, I guess, PayPal maybe not really as important, but let's just say PayPal has been pretty volatile. Out of those 6, even maybe Boeing you can add as a 7th. If we get like 5 out of the 7 or 4 out of 6 beat and move up, that's going to be a pretty big sentiment. I would imagine a sentiment shift to the market. If we get 4 out of 6 down and down big, yeah, you're going to see some more panic, big time panic potentially. But this is a big week. It's gonna be big. It's gonna be a big week for sure across this stuff. Really quick, I just saw a little CNBC little headline popped up here. It's gone now. Just that when they have those little red headlines, Japan's down like 2% apparently overnight. Okay, whatever. We'll see how that plays out. I don't know how much of an impact that really. Oh, here it is. Japan stocks down 2%. Oil slides more. Oil coming down though. It's gonna be good for inflation numbers. Next CPI, I guess, coming CPIs if that stays down. So Japan's down 2.08 on the early trade Monday. Looks like across Asia we're down. New Zealand and Australia markets are closed for holiday, but yeah, it looks like things are continuing their down pull across all that stuff. For now, we'll see if it holds up into tomorrow and how we end up opening up. But that's something to think about. Maybe into next week if that holds. It's not a great correlation, though. I'll be honest. It's not like because overseas are down. We could be green, they could be huge. They could be huge red. It depends. It doesn't. They don't correlate perfectly. But if they're all green, it could be a good sign. Potentially for some strength. Maybe we'll see. Between the huge candles and earnings, that's why the spreads are so juicy. Exactly. I would stay big in cash this week for sure. No, yeah. There's no need to be. Overly leveraged across short-term plays or whatever. If you're going to play short-term stuff, just let things play out and there'll be some volatility to play off of. So there will be really. Up big time, just earnings on text makes me worry. Yeah, no, I think it's a smart move. And there's when you come in a time, there are times where you'll have earnings like this and no one will care, and the volatility will be minimal, right? It's just that the market's doing what the market's doing. There's a lot of emphasis on the Fed. There's a lot of emphasis on inflation rates, and now we have recession fears. Like you have all this stuff piling on, so that you have everybody sitting there like this, ready to go, hitting buttons just because why not, just to react off of reports, right? Obviously, the Netflix numbers are bad, and the future guidance is bad too, which I think is more important. But you are so sensitive, so that's the market we're in, and that's why we're getting those reactions. You'll go through periods of time, go back a couple of years and into earnings cycles, and whatever. Oh yeah, it's earnings this week for a couple stocks. Okay, cool. Whatever, we'll see what happens. Yeah, maybe I'll play some calls or puts as a little, lottery ticket, but you're definitely not expecting 30% moves on large caps. No, definitely not. So let's see. Think about buy puts and calls at the same time. Yes, the only problem, again, that just for those who are who are looking at that, if you're looking, let's just look at the spreads as it is now for this week's contracts. This week's expiration is the 29th, right? So if you wanted to go and buy a 185 call as of the close last week, it's going to cost you $11.50. And if you wanted to buy a 185 put, it's going to cost you $12.15. So essentially, for that to make you money, you would need Facebook, I guess Meta, you would need them to go $12+ in your direction, right? Roughly on the earnings. So let's do the math here. This makes you money. Actually, no, more than that. Sorry, 24. Because you're going to, again, net, you're going to pay, let's just say, you're going to pay 11. Let's just round these numbers to 12. You're going to pay $12 a contract for the 185 puts and the 185 calls, right? Going to cost you $24, $2,400 in option terms, okay? $2,400, okay? So you need a 24-point move. You need Facebook or Meta to drop to at least 160 based on the closing price on Friday, or you need it to go to 210. So it could do that. I mean, it could I think it very well could, but just understand anything in between, you could be completely wiped because they can both expire worthless, or not both, but they could be both in tough spots. So one of them will make money and one will not, but you're going to have to make sure you recover the losses of one of them in its entirety. So that's ideally the whole problem behind that. When you're playing that, the intention is that one of them expires worthless and one of them makes you a lot of money to cover up how much the other one cost, ideally. So what you could also do to kind of squeak a little bit out of it too is because Facebook, their earnings are on, where is that? On Wednesday. Come Thursday morning, you'll be able to get rid of one of the contracts. Let's just say Facebook dumps and Facebook is down at 160. Great. You're gonna have one contract that's gonna be worth a good amount of money, about $25, and then one contract will also be worth maybe $1 or $2. That 185 call be worth $1 or $2 on Thursday morning because it still got till Friday to the expiration on Friday. So dump that immediately, I guess, or we run the risk of a reversal, which I would imagine will be rare in that situation. Dump the one that's wrong on Thursday morning. Hold the one that's right, or take the profits if it's significantly right in your favor, and then play it like that. You could do that too. So that's the downside, though, when you play those types of when you play the option moves like that, when you're playing for both ways. It's just a little bit of you just have to make sure you're aware of it. Just In these stocks, yeah, could we get those outlier moves for sure? But it's very, I've seen it more often than not that people will do that. You'll get the move up or down that you were looking for, but it won't be enough to kind of make up for the implied volatility, and it won't be enough for what they're pricing in ahead of time, which ends up hurting people and killing them, which, there's no need to get burned, especially if you're playing over your head. If you're playing spreads and you're willing to risk a certain amount, fine. But if you're going to get over your head, then there's no need to get caught up in that. If you don't want to, if you don't know what you're doing, or you're not willing to take that risk of whatever you're going to risk on the contracts, or just play spreads, man. You can play put spreads, call spread. You can play, spreads across that too, and risk X amount. You know what you're risking, you know your reward, and that's it. I'll be buying the dip this week after earnings if we hit some zones, and we'll see flows coming in. Well, yeah, we should. We'll see how that shapes up. I would imagine that if we do see, where's the future? I got so many tabs open. If we do gap down and some earnings are pretty bad midweek, I think we can see that. That's a good buying opportunity. We'll see though. Microsoft will crush their numbers. Google may come in, barely beat. You want to do short straddles for IV earnings crush? Yeah, ideally. And there's plenty on terms of that. There's plenty of videos out there when it comes to all these different option strategies. But like, that's a great. People need to understand that. To be honest, when it comes to option plays, like you don't even have to play like very expensive stuff, risky stuff. There's ways to play certain spreads or certain option strategies that could be pretty cheap, pretty affordable. So pretty much any account size, and can be very, consistent, or in terms of how you want to play it, it can be very, very easy to play. Not like it's like, oh, you just might have to have a higher level of options trading. So it's probably not, it's going to be like level 3 probably or more on options trading. So you have to make sure you're approved for that on your broker, but it shouldn't be too hard to get approved on Webull, Robinhood, TD Ameritrade. I don't think it should be that hard to do it either, but depends on the brokerage platform ideally, and depends on your experience and your level and if you want to lie to them, right, or not. I don't advise that. However, people do it and they get away with it, and they can trade options, they can trade all these different types of styles and strategies, which good and bad. There's the positives, there's the negatives for sure. Flip some SPY 500s. I think that, to be honest, I'll be watching big time is that this week is going to be SPY. If we come down to into this zone right here, dare we say, or sub 420, it gets really, really interesting for me, I would say. But the biggest thing is going to be, at least in my view, is going to be this. Over 2.95, you're going to see tech get hammered, I would imagine, with the current situation. Depending on how earnings go, I would imagine you're going to see NASDAQ hit new lows if this touches 3 next week. If not, that's going to be a good plus, especially when we talk about biotechs too. I mean, my favorite sector rebound of choice is biotechs. Really, the reason why is because some of them actually have so much cash on their balance sheet that it's just like these numbers are getting ridiculous. But this could be a nice reversal break, downtrend break, and a big move back up, really off the 10-year, moving back up to, moving down ideally, would help out the biotech sector. So we'll see. That's what I'm looking at. With some option calls for a small count, the best probably way to play that would be spreads. Credit or debit spreads, if you're approved for those styles, you can play them very, very like you're gonna have a capped reward on some of these spreads. Right? Your reward on depending upon how you play them, but if you're just playing like a debit spread or whatever, you're gonna have a capped reward and a cap, but you're gonna know your risk. So you can go in here risking $100 and you make $50. Now it's if that is a situation, it's probably more of a situation where you have a higher likelihood to be right in terms of the expiration. There's no or minimal worry about time decay, all this stuff. When it comes to playing the spreads, it's pretty much, is the stock above or below this price, or is it in this range? And if it is, I'm making X. And if it's not, I lose X. And it's as simple as that, to be honest, when you play the spreads. So I would say that put credit or debit spreads, you can play put calls, whatever, either way you can play, depending upon the style and strategy. And there's plenty of videos, I think, on the TC Trading channel, which is linked down below in the video description. TC Trading channel option playlist, and we got a bunch of videos covering how a lot of different strategies work, walking kind of step by step through all that stuff. So that's good. It's helpful if interested. So that's that. I do want to pull up a couple things. NEO, we looked at last week a little bit, but this is a gap fill potential down here towards 15.25 on NEO. Something to think about, something to watch on that guy. I do want to also look at a couple other names. Snapchat had earnings, and it did actually come down right into the spot and bounce. So it's holding that support for now. Snapchat support here at $28 a share. That's a spot to watch. We talked about JMIA as a really interesting level, and it actually held up decently on Friday. It's at a really good spot. I mean, risk reward. You want to talk about a play with good risk reward. You want to talk about an idea for a possible covered call strategy. Grab 100 shares here or however many 100 shares you can afford, and then just sell covered calls on this guy every week. If I buy 100 shares at $752, it's going to cost me $750. I could go ahead right now and sell the 9s for a $10 profit. So I can go ahead, lock in $10, put it in my pocket, go out to lunch, go get a sandwich, and take my $10 out. Ideally, I would want to compound it, but that's everyone to each their own. Maybe you can get a $5 sandwich, you get a 6-inch sub. I don't know how much they go for these days. They're probably $10 these days. I don't even know, but maybe that's what you want to do. But compound that, and then if it hits 9, hey, you know what? I'll take a 9. I'll take a $9. I'll take what is that on a percentage-wise move? A move off the 750 to 9 is going to be roughly 20%. I'll take 20% in a week and pay me $10 to do it. Pay for my lunch, and I'll take 20%. You know what I mean? So that's the idea. This is a great candidate for that. If I was going to do that, I would want to make sure I research a little bit further, have a stop in place, or have a strategy in place that I believe we are looking at a long-term hold, and that's that. But that's the idea behind that play. So that's a good idea for that too. We looked at that one last week. It's just something to note. Tesla, really quick. I want to look at Tesla. I mean, Tesla, 975 is your spot. It's been holding quite well. If we see green, I mean, this Tesla held up really good. If Tesla, the market wasn't as weak as it was last week, there's almost no doubt in my mind we'd be setting up for a breakout over this downtrend very, very soon, if not already last week, which is up here towards like 1,135, 1,140 or so on Tesla. So we'll see. Robinhood has earnings this week, I believe, on, is it Friday? Let's see. Jump back really quick. Thursday after the close is Robinhood earnings. Man, like we've been saying, Robinhood is this is the chart we're looking at. I need to draw in support zones right here. Boom, boom, boom. Yeah, right there. That's your spot, roughly speaking. Right in here. Just under 10. 10's been a good spot for Robinhood. But does this not look like a good swing, at least small cap swing bottom play setup to me? I mean, earnings is the risk, so holding through that because of how volatile things have been is risky. But last earnings, Robinhood dipped and then ripped. So, you got a better dip buy. I'm interested to see how this one comes out. I don't know if you're going to see a lot of great stuff of the past couple of months, past quarter, but potentially the guidance going forward. Why? They increased after hours trading. They now have the option to use crypto wallets. There's more use. There's more reasons now to use the Robinhood platform than before. So I wouldn't be surprised if this next guidance going forward is actually pretty decent. So I do think that we could see a nice move in Robinhood if it holds up and if the earnings aren't terrible. We got a pretty nasty past couple of earnings. So we've seen a big move down off of the $10 zone. I mean, you get into a spot that I think we could be looking at a nice reversal. So technically speaking, versus $10, pretty good spot to watch. Yes. ARK at March lows. Yes, ARK Invest, by the way. Let's just jump into it. So close. I would imagine we hit them tomorrow, if we gap down a touch. ARK is about to break below March lows. ARK is back at a spot we haven't seen since, you got to go back to 2 years ago, late April 2020. On the rebound from the March lows of the pandemic. Yep, that's where ARK is sitting at right now, which is nuts. That's an American Airlines 21,513 call. Let's look at that. American's been good. It's been holding up pretty nice. I like it if it comes back down towards 19 for a decent bounce off the 200 SMA at like 1875. There is a stronger resistance up here towards 22, 25, 2250 or so. So be careful of that. didn't quite get there all the way, so there's still room up, I think. A May 13th call off 21 strike. Yeah, it's not a bad spot. I personally would have. It depends on when you bought it. If you buy it on a retest back down here towards like $19 a share, a great, much better buy than just randomly buying it off the move. So depends. You're getting up to resistance. So I'd want to be seeing this thing back down towards 19. Buy that there for a move to 22. Or more. Oil comes down, market stays strong. This is going to have a week. Airlines, travel, they will do very, very well. The key for these, though, is this. Oil, under $100, I want to see. Also, I want to see the markets up. If we get that combination, markets are up, oil's down, the airlines, based off last week and how strong they were, they're going to have a very nice week. Or even, a couple of weeks, a couple of months. That's the idea. So these are primed, and especially based on what they look like, because they're looking a lot better than what the overall market looks like. These are primed, and we're finally getting that move that I was kind of expecting or anticipating, for the past 6 months or so. Didn't know when it was going to come, but we're finally getting that strength. These will be, if the market does have any sustained bounce or any sustained uptrend from here, or even just chill period of time, volatility kind of wears off, whatever, Vixx pulls back, and we kind of just chop around or slowly kind of grind higher. Doesn't have to be all-time highs. These will go up and test the highs of last year. I have no doubt in my mind. American will be up here towards 25. You're looking at like United Airlines, probably come up here towards $60. Delta, DAL, probably coming up here towards 50. JetBlue is the one that has been the weakest. Obviously, with the buyout from Spirit, they got hit pretty hard off of that for whatever reason. Speculations of now higher cost, whatever. And how that works out. This is where I still see the best risk reward, just bigger picture. Obviously, I want to see 18. That's my target on this thing. It's lagging behind the airlines, but if the airlines do quite well, I'd imagine that lag, right? That gap between, let's say, American, JetBlue, or Delta, American, United, and JetBlue tightens up, and we see a bigger move back up. So that's what I'm looking at on the airlines. That's my thoughts. BA, Boeing, Santa's earnings tomorrow. Your thoughts? I have no high expectations at all for this thing, and I don't think many people are too worried about it either. So I don't really think this would be. It kind of curled up a little bit. It could be decent earnings. We'll see, but we'll see if it falls below this 155. Then it's probably headed back down towards, what is this spot? Down towards 120 maybe. But I don't really know what to expect, especially with small caps, penny stocks these days. Anything can happen, and I have no idea. I haven't been following them, to be honest, so I don't really know what they're about to pull on these. And this was formerly NAKD, by the way. Thoughts on Snow? I do like BA. Let's take Boeing. I would imagine would be a similar play to the airlines. It's not like a pure airline play, but it's similar. Boeing is a decent risk reward off this area right here. So, it's in this downtrend, so it's not like it's perfect. It's not at the bottom of the downtrend. It's like kind of towards the bottom half. But you got a decent, a really nice $100 move back up to last year's highs around this time last year is where you're looking at. So that's a massive, massive reversal. If the airlines keep holding strength and the market holds strength, I would imagine Boeing does decent in that time span. Snow. What's Snowflake looking like? Snowflake came down. Here's your spot. The March lows. So 165 is your support. Under 165 gets kind of gross, and then you're looking at the market to kind of give you answers. But until then, 165 is your support. So 165 is a good bounce zone, I think, on Snow. If we see that could be a good spot to go long for at least a short-term trade. And then under that, all bets are off. It's going to zero. No, it's going to do what the market does. So it really, whatever the market does, it's going to react, and it's probably going to react in a bigger way. So if SPY wants to bounce, if NASDAQ wants to bounce, a substantial amount, even if Snow was to come down to like 140, it's going to then bounce with the NASDAQ, with the S&P. So it will do that. These are just levels to watch as possible spots of support resistance, just to keep an eye on. Amazon, we have not looked at. I'll look at the chart for that because Amazon earnings are coming up, and those earnings are, I believe, Wednesday. Let me see. Those earnings are Thursday. Amazon is Thursday after the close. That is when they have those. This is coming down to back into here. So honestly, Amazon at 27.5, like 2,750 per share is a spot of interesting support I would like. And to be honest, too, look at this. You have an inverse head and shoulders potentially setting up, too, on Amazon. If it comes down, it's actually held up a little bit better off, I guess, the last earnings strength. But here's your left shoulder. Here is your head, inverse head. And then we'll see. But if you get a right shoulder right into here, I mean, that's your reversal. So you don't want to see this thing dropping below the lows of March, ideally. And that's the play. That inverse head and shoulders will stand until it doesn't stand. It doesn't have to be the end all be all. It's not, oh my gosh, inverse head and shoulders broke down. It's done for. No, but it's an idea to play off of, and it could be setting up in that way. And there's going to be, there's a lot of stocks that have very similar looks. So we'll see. Wish is getting destroyed. I don't know much about BBI. I do know Wish has gotten a lot. There's been a lot of insider selling as of late. It's just down, down, down. I don't even know. This is now like a penny stock almost. It's got a pretty big float, but I mean, I haven't followed them. I haven't seen their earnings as of late, but this has been one that has been essentially dead for a long time. You can probably get a reversal off this one. The question is when, and does it go sub $1 before you get that reversal? Same thing as Robinhood. Does Robinhood go down to $6 before you get a reversal back up? Or is it reversed right now off the $10 area? We shall see. But I don't really have too much to say about Wish. I haven't been following it super, super close. It's just that it's been getting, it's been just steadily kind of declining as of late. Let's see. Futures back to the downside. Let's see what futures looking like. I want to wrap things up with the futures here really quick. Yep, now they're down a little more. So this is kind of, this is what I think that we want. I think we want to see for a bounce, a reversal play is futures dumping early, and then that reversal could be putting on, depending on where it bounces from. We'll see. And then earnings will be the next curveball from there. So we shall see. We shall see. That's the idea. Hopefully that was helpful. We went for about an hour and 10 minutes, hour 11 as we speak right now. I appreciate you guys for tuning in. Thanks so much for all the comments. We talked about a lot of good stuff. The beginning was more so big picture, what's going on, all that kind of stuff. So you want to go back and watch the first few minutes. That should be helpful to kind of see what things are looking like. Thought processes. By the way, oil is under 100 right now. WTI crude for June contracts. They're for now. We'll see if it holds up, but that's a good sign for travel stocks too. And the 10 years at 2.88. So the lower this goes, the lower oil goes. I think you're setting up for that reversal on the market, but we'll see. We'll see. Thanks so much, guys. We live Monday for Power Hour. We honestly might do Tuesday. We might do Wednesday. We may as well do some of the earnings. So we'll see. But that's the plan for this